What's up everyone, it's Scotty with MoneyVest. So in today's video, we are going to be talking about Tesla, and there was a report that was recently released that Tesla could go down to as much as $14. I mean, that's how much the stock is worth, is what one of the analysts said, while also shorting the stock here. And so that's what we have on the report and on the agenda for today. Lots to unpack, and this type of headlines do create a lot of I would say a lot of fear around the stock. So I'm kind of here to set the record straight and really help you understand where the bearish analysis is coming from. You got to understand the source and how there are certain things that are possible versus maybe there are some things that aren't possible. So hope you all enjoy this video, find it helpful. If you do, make sure that you drop a like and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only private videos, including all the trade alerts and trade ideas, options alerts. Everything's going to be included. I'm flying back to Dubai tomorrow, so I will be back at my home office, and the audio and the video quality will be significantly better. So thank you so much for your patience. Really appreciate you. So this right here was the report. So noted Tesla bear says Musk's EV maker could go bust and stock is worth $14 a share. So this right here was from Per Lekender, a hedge fund manager who has been shorting Elon Musk's electric car maker since 2020. So he says that Tesla could go bust while its stock could fall to $14. A fund manager who's also shorting Elon Musk's electric car maker since 2020. So I'm sure if he's been shorting since 2020, he's certainly lost a ton of money, because Tesla obviously did incredibly well in 2020, 2021, up until 2022. And of course, we did see a significant pullback and then a recovery back higher. And then, of course, now it's back down. His comments come after Tesla reported 386,000 delivery vehicle deliveries in the first quarter of the year, significantly below even the lowest market estimates. Now, as we know, there's going to be a lot of bears that are going to be coming out. So a lot of people who've been waiting for this moment for Elon Musk, for Tesla to kind of slip up a little bit on the deliveries or margins or whatever, they're going to start coming out of hibernation now, and we're going to see a bear central on Tesla Street every day. That's what's going to happen, because it is quite literally dead out there. It's all bears. Bulls are kind of in hiding right now because of the fact that, Tesla's been underperforming. It's down 30% year to date. Deliveries are down on a significant year-over-year basis, quarter-over-quarter basis. So that's just the market cycles, right? I mean, we saw 2020, 2021. Bears were in hiding. Bulls had full control. And right now it's quite the opposite. We're seeing more and more narratives like these. And he says, and I quote, "This was really the beginning of the end of the Tesla bubble, which probably arguably was the biggest stock market bubble in modern history. And I actually think the company could go bust." So, when it comes to company could go bust, and bust meaning that it could go bankrupt, that's really what he's talking about over there. This in itself kind of explains the lack of understanding of fundamentals, just from the best experts and best investors in general. Because if you come take a look at the balance sheet for Tesla, right? The balance sheet is in a phenomenal state. It's a fantastic situation, because right now the company, cash and cash equivalents and investments, they've got almost $30 billion of cash, quite literally cash, hardcore cash right now the company has. And if you come down the bottom line, so if you look at the total other long-term liabilities, so this right here is actually the debt that the company has, right? So if you come across, we're looking at $8.15 billion, right? $8.15 billion. Oh, so I don't know what happened there. So if you come back down, so $8.1 billion is going to be the current level of debt. And then if you got debt and finance leases, net of current position, that right now is going to be at $2.8 billion. So if you combine those two, we're looking at over $10 billion worth of, let's say, debt of finance leases, and again, other long-term liabilities. So that, and again, cash is sitting at $30 billion, right? $29 billion. So 3 times more cash than the debt and, of course, the other long-term liabilities. So that in itself tells you a little bit about, okay, the company's financial positioning is strong, because, I mean, they've got 3 times as much cash as long-term debt. So if they wanted to, they can pay down all of their debt, tomorrow if they wanted to. And total current liabilities are going to be sitting at $28.7 billion, with their total current assets are sitting at $49 billion. So again, current ratio is also above 1. So the financial positioning of the company is very strong. And that's actually quite interesting, right? Because when a stock starts selling off, a lot of people start pushing the narrative that it's going to go bankrupt. Same thing happened with Meta. Same thing happens with PayPal. And now same thing is happening with Tesla without any understanding of the balance sheet, without any understanding of kind of where the cash is, how much assets, how much liabilities, like what does the company actually have. I mean, it's kind of funny because people were talking about it in 2022 that Meta's going to go bankrupt. That's what they were talking about. That Meta is going to go bankrupt. Meta is done. Meta's finished as a business, that it's going to go bust. And without any understanding of what the balance sheet has. Like, Meta is probably one of the most cash-rich companies in the world. Even if the business was not performing well, they still had at least 5, 7, 10 years of runway left if they were to kind of deploy all that cash. So Tesla, in terms of its operating expenses, I mean, it is profitable, so we don't have to do that analysis of cash burn. But if it were not profitable, if the company was, let's say, generating an operating loss, then we could take a look at, okay, $29 billion of cash, companies burning through, let's say, a couple $1 billion, every year or every month, whatever, in operating expenses. How many months or how many years the company have in order for it to turn the company around in terms of profitability, and how much time do we really have, right? So that type of analysis is only useful if the company is not profitable. First of all, it is profitable. Second of all, it has more assets and more cash than liabilities and debt. So the bust argument really does not hold any water, at least not at the moment, right? At least not at the moment. This is really just kind of pushing that fear among people that, oh, the company could go bust, the company could go bankrupt to $14. Let me just sell and get out of it while it's at 200s, right? Or while it's at 160s. And that is kind of like the analysis that they're doing. And I really want to kind of set the record straight that, okay, it's far from here. And they're also bracing it off of the Tesla is a no growth stock and should be valued at 10 times forward earnings with $1.40 in earnings per share. Hence the $14 price per share here that they are looking at or valuing the stock at based on 58 times forward earnings. Now, I do agree that 58 times forward earnings is high. I fully agree, and Tesla has little to no growth right now. But that's, again, the problem with short-term thinking and long-term thinking, right? Yes, Tesla may not have any growth because of market circumstances in 2024, but that doesn't mean that Tesla's never going to have any growth in the future, right? I mean, Apple did not have any growth in 2018, 2019. Does that mean that Apple was a done business because their earnings dropped and their revenue did not do well? No. Companies are cyclical. Companies move in cycles, right? Just because Apple had dropped in revenues, dropped in earnings in a couple of years in the past, did not mean that Apple was done. It just means that Apple was kind of going through some changes, market circumstances, whatever the case may be, but then it executed well and did well, and of course, growth came back in. Same thing is true for a lot of other big tech companies. So to say that Tesla has no growth based on just these numbers is kind of short-sighted in my opinion. And of course, I think that 58 times forward earnings is too high. I agree. I think a more appropriate growth forward earnings multiple is going to be 30, 35. That's exactly what I've also priced into my model. And again, earnings are getting hit because of price cuts, which we have already addressed in our videos. But this right here is quite significant. If Tesla obviously were to get down to $14, that would be about a 91% downside from Thursday's close for Tesla, which I think would just be absolutely crazy. Elon Musk would obviously lose a significant amount of wealth, not to mention a lot of stock. A lot of shareholders would also lose a tremendous amount of wealth here. But this right here is the overall analysis. I mean, Tesla continues to form some type of a bullish divergence. Resistance is going to stay put at 177, so that is going to be that target and that resistance to keep in mind. And support level, of course, is going to stay put down to $150 for Tesla. So we're seeing a little bit of that downtrending channel of lower highs and lower lows, and resistance is going to stay put all the way up to 177, 176 for Tesla at the moment. So those right there are going to be some levels to keep in mind for the company. But again, I'll continue to kind of update you guys. We've got the earnings scheduled for at the end of April. So April 23rd is when Tesla reports earnings. So again, hope you all enjoyed this video, found it helpful. Let me know your thoughts down in the comment section below. But I am going to kind of write this off as a BS report because, as I said, going bust, short-sighted because the balance sheet's fantastic. The only thing that I somewhat agree with is the fact that, okay, forward earnings multiple 58 times is high. A more appropriate would be 30 to 35, but at the same time, Tesla is not a no-growth stock. It's just going through some type of challenges because of higher interest rates and the macro factors when they're at play as well. But that simply means that long-term potential still continues to be solid, and of course, the company will show us that through the earnings in the future. So as always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining us. Happy investing, and I'll see you all in the next video.